I'm a kid from North Dakota, right? So I didn't see a whole lot of options as a kid. Everybody's parents go to work Monday through Friday, kind of come home, weekday chores, errands. I just was like, this can't be all there is.
This is Ann Malum, the founder of Solidcore, a Pilates studio with over 100 locations that she sold for $88 million. Today we're going to talk to her about how she did it and lessons she learned along the way that we can take with us. Solidcore is like Pilates, but even more extreme. And Pilates is one of those workouts that from the outside looking in, doesn't look like you're doing a whole lot, but in reality is very difficult and targets muscles that you don't often use. Even Anne was surprised when she took her first Pilates class at just how difficult it was.
When I had discovered Pilates, I was in LA for work, and I walked by this Pilates studio and thought it was like, again, super cute. Considered myself a pretty decent athlete, and I got completely destroyed by that class. And I'm like, nobody knows you can work out like this. Yeah. Got really into it and was like, this is going to be my next thing.
I had Sienna, the instructor from my class, show me some of the moves that we do before class, and I was quickly feeling the burn. Wow, yeah, definitely feels different than doing a regular lunge. More intense. And after taking the actual class, I was left very sore for 2 days, but also feeling very strong. Where were you at in your life when you started Solidcore?
I was 32, about to be 33 when I started Solidcore, and I'd been running this nonprofit that I'd started for 6.5 years.
Well, helping the homeless get back on their feet is literally what our next guest has done. Ann Malum is the founder of a privately funded organization.
It's called Back on My Feet. The national nonprofit helps people experiencing homelessness get on a running track with running shoes.
I was helping men and women in homeless shelters to regain independence in their life by engaging them in running, to rebuild self-esteem and confidence, and it was super fulfilling. Mm-hmm. And then after 6 years of growing it across the country, it was this feeling of maybe it's time to try something else. So emotionally, I was in this place that I feel like I still had something to prove. I didn't really want to be a one-hit wonder.
So you had already done kind of an entrepreneurial thing before starting Solidcore, but then this was pretty different, like starting an actual studio.
Yeah, like the nonprofit before I feel like I was getting a lot of attention for it. I mean, I feel like I went from starting this running club to deciding this was going to be a full-time thing for me. I'm going to try to build it into a nonprofit. And all of the national media just seemed to hear about it very quickly. And we raised a lot of money really fast. I hired people, started scaling. So when time to leave, like I knew that I had figured out the scaling equation, and I wanted to try my hand at like a for-profit business. And I love health and wellness, and so everything just kind of clicked. And I was like, I'm gonna build a massive company.
So from the start, you were like, I'm gonna make this big. You're not just going for like one little studio.
Yeah. And sometimes people ask like, oh my God, Ann, did you ever think like this would happen? And I sort of always pause, and I'm like, yes, because that was the vision and the plan. And I think sometimes reporters can ask women that, and just like we're supposed to be like, gosh, I had no idea. I feel so grateful to be here. And I've never taken that stance. I'm like, my foot was on the gas. I had to take a lot of risk. I had to go through a lot to like get to this point. And it was always the plan to build an empire. I wanted to build a national brand that people knew and that could really help mainly women like change their bodies, their confidence, and the way that they viewed strength.
Kind of hard to accidentally do
that. Totally, but like, you know what I mean? It's like, oh, did you ever think? I'm like, yes, I absolutely did.
That's so funny. So opening the first studio, how did you go about doing it? I know you used your own savings, right? But did you know anything about like, okay, what's a good location? I guess like even just getting the reformers and everything, like how'd you go about it all?
Yeah, I knew nothing. And I feel like that's a really good reminder for folks. We think we know a little bit about something, but we don't know the rest. And so it stops people from actually making the decision. And as any entrepreneur, and I know many, like you know enough, right? And I felt like this is a game I can win. I know how to build community. I know how to scale. I feel like I'm credible in the health and fitness space, and the rest I will figure out because I'm smart and I'm resourceful enough. So I had saved about $175,000 over the last 6 years. And trust me, I had zero money when starting Back on My Feet. I was really bad with money. I didn't understand it. And once I started speaking and, Back on My Feet started to grow, I took a higher salary. I was getting bonuses for performance. I just banked all of that money, knowing that one day I felt like I want to have enough to be able to make another pivot or decision in my life. And so, yeah, I pretty much put that 175 all in. I needed it for a security deposit. I needed it to buy the reformers. I needed it to build out the space, to pay rent, to pay people. It pretty much took all of it. And that was really important. I will never invest in an entrepreneur who doesn't have a scary amount of skin in the game. You should feel like this has to work. Otherwise, it's really bad for me. And they need to be motivated by that. They need to be motivated by something deep inside of them, because when it gets hard, it's it doesn't matter. Nothing is going to take it from you, and you're going to succeed.
For that first location, were you nervous about it, or were you feeling pretty confident that this is going to work?
Yeah, of course I was nervous. I remember talking to one of my friends. He was a board member at Back on My Feet, and he had been pretty successful in his career. And he was just like, I'm willing to bet on you. And I didn't have anything open yet, and I was about to open, and I was like, gosh, I'm putting all my money into this, right? I know that limiting and self-doubt is completely normal reaction, human reaction. And so he offered me, $75,000 for 30% in my business. And part of me was like, this would be really smart and responsible of me to take this money just in case it doesn't work out. And the moment I said those words out loud, it was like, if I'm going to take this money, all I'm doing is putting a quarter in the doubt jar and communicating to myself that it's okay if it doesn't work out, because I hedged my bets here. I was like, absolutely not. I have to work through the self-doubts. These are normal. Everybody has them. I really do believe in this concept and the idea and my abilities.
Yeah, and 30% is a lot.
A lot. But we all have, everything is relative, right? So back then, $175,000 was a lot of money to me. I didn't understand tens of millions of dollars at that point, right? It was still living in reality. My payout at Solidcore would have been drastically less. I would have had to do just the same amount of work. So I always tell founders, if you should push off giving away or raising money for equity as long as possible. You want to be in the driver's seat. So when I did raise money, when I had 25 studios, I had 4 suitors at the table.
I think that's smart, because I see a lot of people raising money from the start, from the very beginning, and it is okay, later down the line, then they have to just keep raising. And
you get diluted, and it's really worth educating yourself about private equity. But the best thing you could do in the beginning is make your business as valuable as possible. That is how you are going to get multiple offers at the table, and that's what you should focus on in the first few years.
Do you think doing that too makes you more motivated to make it profitable?
When you take private equity money?
I think before, because if you take the private equity money, a lot of companies like Uber, for example, they're losing money for years just to get customers. But if you're not able to do that for say the first 3 years, it's you have to show you can make money.
Yeah, and a tech company is a little different than a brick and mortar. When you have a brick and mortar fitness company, you need to show that each unit can be profitable, can grow, your same sales year over year is growing. And if that's not happening, it's not like you can be oh, but it's going to happen in 5 years. It's well, why would that be the case, right? Where tech, once you build the platform and you have it's just less money to acquire customers, where it's not really the case for brick and mortar. So you need to show from the very beginning that you have something that people are buying. You have, sticky customers. They have a high lifetime value. All of these things are really important in brick and mortar, and it's worth educating yourself.
So going back to that first studio, were there things that you wanted to do differently in yours than other Pilates studios?
I was really focused on the first studio on delivering the product inside a very playful, competitive experience and community. I didn't spend a ton of money on the build out because I didn't have that much, right? I had to deal with $100 some grand after security deposit and reformers that I had to buy. So I didn't put a whole lot of amenities in this place. And I was just convinced people aren't going to come for the amenities. I'm not going to be able to compete there, right? I don't have millions of dollars. I'm not going to be an Equinox or even a SoulCycle at that point. Like, this is pretty much bare bones. So I focused on the trainers. Like, I need to have amazing coaches. The product itself needs to be killer. So we have to execute on the product and the consistency and all of that. So we had two bathrooms. I wanted pallet wood in the studio, and I got a quote for the pallet wood for someone to bring it and put it up, and it was like $10,000. And I'm like, $10,000? Like, there's no way I can afford that. So I found freepalletwood.com, got pallet wood delivered, convinced a bunch of my friends to help me strip the pallet wood, nail it to the wall, because that's the only thing I could afford back then. And then, of course, as time went on, we put a little bit more money into the studios, but it really was our brand for so long of like, you're not paying for, you know, a beautiful, beautiful space and amenities here. You're paying for the small group training, the quality of the workout, to be on the machine, and the level of coaching and the results.
Even today, the front desk area is fairly simple. It's nice, but it's nothing too crazy. But the reformers themselves are not cheap.
The machines are pretty expensive, right?
Yeah, well, that was another thing, you know, like the most important decision that was made in order for Solidcore to actually become what it was to make our own machines. And we were a part of a license agreement with Legree for the first couple years, and it was very clear that relationship wasn't working. You know, our machines were breaking. I couldn't get the parts fast enough. I couldn't get the machines fast enough to grow at the pace I wanted to grow. And I frankly didn't find any real benefit of being in the relationship because it wasn't a franchise, so there really wasn't any support there. And so I was like, I have to make my own machines. I need to be in control of the manufacturing, the delivery, how many we need in order to open. You know, if I was like, okay, if I want to open 30 a year, you know, I need to be able to make 300 to 500 of these machines at once. And if I have to pay somebody else retail, like, that's going to be double.
How did you go about that part? Like, finding a manufacturer? Like, did you have to kind of design it too?
Yeah, we had to find engineers. We interviewed people. You know, that went through a couple rounds. We worked with somebody in the beginning who didn't do a good job, so we had to hire somebody else. I mean, I probably, like, it was hundreds of thousands of dollars. And once we got the machine tooled and like, okay, here's the engineering plans, then actually, like, randomly, my first cousin manufactures some products in China. And I'm like, do you think you can make these? And he was like, yeah, I think we can make these. So now he manufactures our machines, which is, yeah, which is kind of cool.
And then I'm curious what a day in the life was like at the beginning of Solidcore. Like, were you teaching classes and like doing everything? Yeah.
Yeah, I mean, it's so vivid back then, and like such great, amazing memories of being in the studios. But yeah, the first studio, when I moved to DC, I moved right next door to the studio because I knew I needed and wanted to be there, and that was really important. So when we opened, we were busy from the beginning. People were just very curious. We got on the cusp of boutique fitness before it was really taking off. There was no SoulCycle or Orange Theory or Berries or anything in DC. So was fortunate enough to have some media contacts, got some press. You know, I was guerrilla marketing. Any place I think people would be interested in, I was like passing out flyers. So we were busy from the beginning, and we started to be like, okay, we need a 5 a.m. class. Well, none of my coaches could get to the studio because they all took public transportation, which wasn't open at 4:30 in the morning. Pretty much Monday through Friday, I coached the 5 a.m., 6 a.m., 7 a.m. I would go home, take a nap, you know, get up, do like administrative client emails, anything that needed to be done on the back end, you know, go back to the studio, maybe take class, but also just be in the studio. So I probably was in the studio, I mean, 50, 60 hours a week in the beginning.
Yeah, that's a lot.
On top of doing like payroll and, again, client email journeys and marketing, and I was just doing it all, which is also, I think, really important, so you can figure out what you're really good at and like what you can easily delegate when it comes time to bring on somebody to help you.
Yeah, back then, was it overwhelming or exciting?
Oh, it was so exciting. I loved every minute of it. It never, like, it's what I wanted to be doing. And
yeah,
most entrepreneurs, when you're starting a business, like, it's because you have such a passion for it. And like, I wanted to be in the studio. I didn't want to be any place else. Like, people I was meeting, all of the clients and we all just spent 24 hours, 7 days a week together in the studios, outside the studios, grabbing food, going out, going to other workouts. I mean, it was great.
Are there things about opening a fitness studio that people don't really realize?
Things about opening a fitness studio, every market is different. Every market has its own jurisdictions. You know, New York is probably the most complicated from what I've seen, New York and frankly LA. You need inspections. You need to have what's called a certificate of occupancy from the city to be able to operate. You've got to go through, again, inspections to get all of those things. So I think when people sign up for a current location or a space, doing a survey of the space to figure out what works, what doesn't work, because some people walk in, they're like, oh, I'll take it. And they're like, oh my God, the plumbing is crap and we didn't realize, and now it's another 75 grand for you to fix all of those things. In DC, you have to have a 10-ton HVAC unit to have a fitness studio. Like, well, you don't really need one, but that's the rule. And that's inexpensive. Like, it can be anywhere from $60,000 to $110,000 that you just need to have. So looking at all of the jurisdictions, laws and rules around fitness studios is really important, so you understand your full expenses. I think that's probably the biggest thing people get wrong.
And I know like commercial leases, you can be responsible for more of the maintenance.
Yeah, you totally are. It's called triple net, so you're responsible for the taxes. I mean, again, some of those things are negotiable, some things aren't, but getting a full understanding of what your monthly expenses are going to be. And I always tell folks, like, work backwards. Understand the full expenses, meaning payroll, right? Which is, it's a soft cost, meaning like it's going to go up and down, but your rent isn't going to change. You know, these costs are going to be there every single month. So how many clients do you need to have taking class per day at what revenue per head in order for you to meet your numbers? And sometimes people just go in and like, well, we're just going to like have all these classes and hope people come. I'm like, well, if you don't know how many you need, you can't measure against that. So anytime we opened a studio from the very beginning, we did a pro forma. And it was like, what's our total cost that we're going to have? Again, are we going to have a studio manager? What's the salary? What are the towel costs? What are, the electricity, everything? And if our average revenue per head is going to be this, can we make this work with an 80% utilization, having, call it 65 classes a week? So like if we can't see that path, and then of course growing from there, like we don't sign the lease. We don't just be like, let's just make it work. Like you really start to get data driven and looking at the numbers that you need to be successful, so you take some risk out of it.
And then how quickly did you start the next studio with the second?
Very quickly. I am somebody who believes in the power of momentum, and we had momentum. People were like, can you guys have a 4 a.m. class? And I'm like, absolutely not. But we had wait lists. We had people like who wouldn't tell their friends about Solidcore anymore because they didn't want to compete for spots for them. So it was just evident that like I need to maximize on this. I don't remember the exact timing of when I signed it, but I had a second location open within 3 months of the first one.
Wow, yeah, that's really quick.
Yeah, and then another one I opened 2 months after that, and we had between 5 and 6 open within the first 12 months. So what that does in my mind is people start to see it everywhere, and it's like, I've been hearing about this and now I keep seeing it. I must be missing out on something, or like this must be as good as I keep hearing it is. So, and plus we got press, right? Everything was just working together to build and maximize and optimize on the momentum, and that really helped us become like the kind of top player in the boutique space in the DC market, which was the only market we were in back then.
Yeah, and then at what point did you expand?
To another city?
Yeah.
Pretty quick. So I had to make my own machines to do that. So we expanded in 15, so about 2 years afterward. And I'm blanking on if we went to Atlanta or Philly. One was 2, one was 3. I can't remember which one came in which order. But I had expanded to back on my feet in those markets. So I had some knowledge on them, which was why for me of like, okay, I know a little bit about these places. I'm only gonna go in markets where I feel like I have an understanding. I sort of looked at what other fitness was there. You look at the demographic.
And then why not New York? Is New York harder?
Yeah, we weren't, I didn't want to go to New York until one, I could be ground level retail. So many places in New York that I was seeing in the fitness space were like on the 8th floor, and the elevator would take forever. So like the whole experience to me just felt like there's so many areas for frustration for the client, and I didn't really want that. I mean, frankly, I know two businesses that ended up closing because the elevator took too long. People were missing classes, and they stopped going to that particular location simply because I can't get to class on time, and if I miss the elevator, I'm 10 minutes late. Parking in LA is another big thing of like, where's the frustration point? Are you on the wrong side of the street? Which is why using a retail broker is really, really helpful. I knew when I wanted to go to New York, I wanted to go ground floor, and I wanted to open several at a time. I wasn't gonna go in there and be like, let's just see how it goes. That's not my personality. I wanted to get like at least three open in the first 6 months. Once I took private equity money in late 17, then I was like, okay, great, that's our next market. Let's start looking for spaces there. So we started to put a lot of lines in the water. Chelsea was our first location. I believe Chelsea, Nomad, Nolita, and maybe Soho were like the first four that we had. And because we were ground level retail, it just again communicated that like, oh, there's a new player in town.
It's good advertising too. Just walking by, you're like, oh, what is that? Yeah.
Absolutely. And so now there's like 20 locations in Manhattan and Brooklyn.
Wow, that's amazing. Yeah. When you're going going to a new city to expand, are you moving out there and like living there for a bit, or how do you do it?
I know I'm not moving to these markets because that's not sustainable, right? You need to be able to hire people, train them. So Solidcore is corporately owned, meaning like it's not franchised, it's all run underneath one entity and one company. So we built out a really amazing headquarter team that they would travel, find the people, hire them, train them, stay for a little while, and then they would leave and go on to the next chapter. We of course would bring people to DC so they could see the mothership, and see how things operate there too. But we knew the only way for scalability is we have to find local talent, bought into the brand, train them really well on what it means to be part of Solidcore, what it means to be on brand, what brand equity means, and how to execute, our workout in our program. Yeah. So no one was moving anywhere to make those things happen.
Yeah, they're just going out for like a couple weeks.
Yeah, probably like 30 days. Like the training is a few weeks long, so it was a combination of our people going to them and then us bringing, whether our studio manager and or the coaches to DC to sort of see how everything works and get them bought into the company.
So from the beginning, you're like putting systems in place?
Absolutely. Yeah, systems are key, right? Like scalability, you cannot scale without systems. So if you think about scaling a fitness company, right? What are the elements involved in that? One, leases. I've met so many people who are like, oh, our next location needs to be here in this neighborhood. And I'm like, you're thinking about it wrong. If you don't see that your second location could be in like 6 or 7 spots, you know what I mean? That tells you that there may be something that you need to change about the brand or the execution if it's only gonna work at that second location. So we use the power of, let's put multiple fishing lines in the water, because one, it gives us leverage. We're negotiating with this landlord and he's not giving us what we want. We're like, great, thanks, no problem. We're just gonna go over here. Him thinking like, well, you need us more than we need you, which was never the case. So at any given point, especially today, Solidcore has like 100 LOIs out.
What is an LOI?
Sorry, an LOI is a letter of intent. So whenever any spaces before they go to lease, a letter of intent is what I call is where the meat and potatoes is of all of the leases. So what your rent's going to be, what the escalation is going to be over the years, how much abatement you're going to get, meaning free rent so that you can build out your location, how much tenant improvement dollars, meaning how much money will the landlord give you in order to build out your space. We were really tough on those things because, especially for me in the beginning, I didn't have a ton of capital. It was just me. So I needed the landlord to contribute some funds in order to get us open. And I just, I'm like, if that's not something you can do, I'm never going to tell somebody how to run their business. But like, we can't open in your space if you're not going to contribute to our build out. We just don't have the funds to do it.
Yeah, so you're not afraid to negotiate with them.
Oh God, no.
Yeah, that's smart.
Yeah, we also we don't do security deposits. I had to in the first couple studios because I was so new, but I would work for constant burn downs of like, okay, well, if I'm open for 2 years, I want, 2 months back to apply for rent. But once we started to get bigger, we had the negotiation power. So I always told people, if I have to put up 25 to 50 grand in a security deposit for you and for the next guy, like you're talking about millions of dollars that frankly I'm never going to see again.
Yeah.
Like they're going to find some reason of damage that like we need to pay the security deposit. Like you never get that money back. And when you're raising private equity dollars, they also view it as a liability. So they deduct all of that from your overall balance sheet, and they're like, listen, if we're going to give you $100 million and you have $10 million, and we're going to give you $90 million, or that's what your company's valued at. So we just like didn't do it, and it worked out in our favor, and either landlords accepted it or they didn't. And if they didn't, guess what? We moved on to the next one.
So you got some pushback, but you're always able to find somebody who.
Totally. And you know, again, one of the best negotiation tactics I feel like I have learned is asking why. Because most people with security deposits is like, well, that's just the way it's always done. And I'm like, that's not a good enough answer. Let me explain to you why it's really important to me, you know, and now, you know, tell me what you're trying to accomplish with the security deposit. Well, we're trying to accomplish, you know, if you guys leave the lease early, I'm like, okay, well, you have a corporate guarantee for that. You know, like we are on the hook for a certain number of years. And if we aren't here for that, we have a legally bound contract that like you can pursue with us. The security deposit really isn't necessary. And you're tying up my cash that I could be using to grow the brand, which is only going to benefit this location.
Yeah, and it's like you're sinking in a lot to the design of the space. You're not just going to bounce after a year. Like,
yeah, totally. You like you're really invested in it. You want it to work. You've done your deal. It's not good for the business if we close either. I also really pushed in the beginning, like in-person meetings with landlords. I wanted them to get to know me, my story, what I'm trying to do. I wanted them to be like, yeah, I'm going to back that girl, instead of just, you know, some name on an email thread that, you know, you don't have any connection to, which is much easier to negotiate and put your foot down and just say no.
Did you find with more expensive cities like New York or LA, did the classes have to also go up in price?
Of course. Yeah, the classes first, I mean, we have studios in North Dakota where classes, you know, I'm not sure exactly what they are today, but like, let's call it $25, where like classes in New York are $45. And some people hate that. Some people think Solidcore is so expensive. I'm like, I get it, but you know what? We never set out to build a brand that was like going to be accessible to everybody financially. Like that's just impossible. No brand is. And I think fitness gets a lot of flack for that. Like no one ever harps on Louis Vuitton for their bags being too expensive. It's like, listen, this is the quality of the product that we think we're offering. We have smaller classes than most people. We have wait lists out the wazoo. So it's just a game of supply, you know, supply and demand. We have to constantly play with pricing and figure out, you know, what makes sense as we have costs going up. Inflation is crazy. People need to be paid more. We, of course, need to make a profit. Like, I roll my eyes when people are just like, oh, profit over people. I'm like, it's not one or the other, but profit is not a four-letter word. Any healthy company has to make a profit. Otherwise, what is the point in us operating this business?
And then did you guys do like memberships and things, or like, I think I've seen it on ClassPass even.
Yeah.
How does that kind of thing work?
Yeah, so Solidcore has, you know, again, I'm sure there's some things that I'm not caught up to speed on since I don't work there anymore. But yeah, we are driving membership. You know, we want people to be bought into to coming to Solidcore, using their membership, and feel part of the community. And we find when people buy a membership, they stick around longer, they come to class more, they see results more. It's beneficial, you know, for everybody. But having those options for folks that are traveling or do a bunch of things where they can come and take, you know, buy a 5-pack or a 1 class or a 10 class, is it going to be more expensive that way? Sure. We sort of view the membership as buying in bulk, and you're going to get a discount on your overall rate per class if you do so. And ClassPass is a tool for us. Like, it's a strategic tool where if we open up in a new market and we need to utilize ClassPass a little bit more for exposure. But for me personally, again, we had tough negotiations with ClassPass. It's no secret that a lot of studios that maybe didn't understand the business acumen, when ClassPass is pitching them of like, well, listen, isn't it better for us to sell $15 spots than you sell them for $0? And my answer was always no. You know why? Because those people are never going to turn in to a full price paying client, and I need them to get close to that. So I would rather go spend the $15, find my client who values Solidcore as like a percentage of their wallet share that they view is impactful, so they'll pay the $40, versus no, Solidcore is worth $15 to me and I'm not gonna pay $40 just to get the same experience. So it's like a really fine dance. Once you discount something, that's what people think the value of it is.
So true, yeah. It's like a psychological thing, I think. Like I always see people saying that even if they're like a videographer or whatever, it's like if you do something for free, then that client's not going to pay you. Yeah.
Solidcore doesn't do free classes. Like it's not something, again, for that reason. If could we fill classes if we did them for free? Of course, but that person doesn't value fitness as a financial priority spend.
Yeah.
That is not somebody that we are targeting, and we don't, it's like you would never go to a restaurant and be like, hey, I'd like to try your steak for free first before I pay for it.
Yeah.
It's sort of like the experiences have always been pushed of like, well, I want to try it free before I pay for it. I'm like, well, then go someplace else because that's not happening.
It's not free to run it either. So it's like
we have
crazy.
expenses here to run. So yeah.
So let's talk about when you did take investments. How did you know it was time to do that?
So I knew it was time to raise money for Solidcore when I didn't want to grow 2x2 anymore. Like I had taken it to 25 studios in about 3.5 years, I guess. And I knew that I would continue to like just grow slowly on my own. And 2, I wanted to level up my talent. I knew I needed more people who had broader experience than me to help me build it to 100 locations plus. So I needed capital and I needed talent. Building Solidcore to 25 locations and having it be in multiple markets put me in a position with private equity firms that like, oh, this isn't just a DC-based thing where like, again, they'll use that as leverage against you too. If you only have your company in one market, they think like it's because it's only in Miami or something. So we had this wide range of geographic appeal for people. So I got connected to a lawyer. SoulCycle founders connected me to a lawyer that they use. And they're like, he's expensive, but he's the best. He'll connect you to anybody and everybody to raise money. I sent him over a bunch of data and he's like, Ann, you have something special here. He connected me to like 6 private equity firms that I went and met with. And I sort of knew what I wanted. I knew how much money that I needed, and I also wanted to take some money off the table. I had been doing this for 4 years, and I had pretty much 100% equity at this time. I had one smaller partner that I had took a little bit of money from a couple of years earlier, but I had so much equity that I could afford to give some away at that point, or not give some away, but like sell my equity at that point. And so, yeah, I had like 4 offers, 2 really strong offers, and then one of them, gave me kind of everything I was looking for, and I just really liked the people. So yeah, that was my first private equity deal with Peterson Partners in end of 2017.
And then you were like, okay, New York, LA, all the other places.
Yeah, so we went from 25 studios to 75 studios in about 2 years and 3 months.
That's crazy.
Crazy,
yeah.
But it was like so exciting and fun.
Yeah.
And again, I love to build.
Yeah, it
and
was
scale.
fun for you. Yeah.
Yeah, it's like, okay, put more fuel on the gas here. Like, let's really go. Yeah. I brought in a CFO, I brought in a COO, and we just hired more people to help us execute this product. So it was beginning of 2020, and I'm like, all right, we're gonna get to 100 studios by the end of the year. That would have been 7 years of growing the business, and I'm like, I'm ready. Like, I'm ready to sell and like to make this a thing. And so we hired bankers. And of course, COVID hit. I know, I feel like everybody's so sick of COVID, but like it's obviously part of our
huge for brick
story.
and mortar, yeah.
And there was so much to learn. I know that it was tragic for so many people. So, put that aside for a second, knowing that I know that. It was a very formative learning experience for me as a person, as a leader, as an entrepreneur, as a business leader. I am very grateful for that experience.
Yeah, so what did you need to do at that time? Because you couldn't, I'm sure.
Well, the funny thing is, like I had broke my leg literally like 7 or 8 months before, and I was on a trip kind of celebrating like, okay, like everything is back, I'm feeling back to normal, and I was on a boat and with 9 of my friends. And I started to see some of this stuff come through about like this coronavirus and something spreading, and you sort of feel like a little bit out of a movie. Mm-hmm. I am not hyperbolic. I am not risk averse. Like, I'm just like, it's fine. But for some reason, I was like, this is going to be something. And I called Brian and I'm like, Brian, I need you guys to run some numbers. Like, tell me what things look like if like business drops to 50%. And he's just like, are you kidding me? Like, you're on vacation. Can you leave us alone? And, obviously that was like March 10th. Mm-hmm. Got back from my trip. This thing started to snowball. And you start to just like hear about things getting canceled, more people getting sick. I was in New York at the time, and then I went down to DC, and I remember lying in bed and like getting the notification that SoulCycle just like voluntarily closed all of its studios. And I'm like, they voluntarily closed their studios? I'm like, like the thing that people forget, we just had no time to process. Like it happened in a matter of days that you have to make this decision to shut down all operations, no money coming in, your staff's on board, people are freaking out about their health. Other people started to do it and I was like, all right, I think we're either going to be forced to in the next 48 hours or we get ahead of this and we just announce the same thing. Until we know more information, we are going to follow suit here and close the business. And I'll Shelby, we thought it would be a couple weeks. We were like, this is going to be a couple weeks. And one of my board members was an executive at Marriott. And I called an emergency board meeting and he's like, Ann, this is not going to be a couple weeks. We have more information than you guys do. You've got to cut expenses immediately.
Yeah.
I had planned to keep our staff on for the next 2 weeks and then we'll make a call. Which again was going to be very expensive to do. But we're like, it's the right thing to do. It's just going to be a couple weeks. And then once learning and accepting that we actually don't know that, and are we really going to eat into our reserve? We had $2 million in the bank, eat into our reserves. Is that really the best thing, frankly, for the company and the people in the long run? And we decided it wasn't. It's my job to protect the company for its future, not just for today. So the next day I laid everybody off and told them get in line for not unemployment. I'm hoping that us doing this now gets you guys first in line before this gets crazy. And I just asked them to trust me. I'm I know it feels hypocritical for me to lay you off and ask for your trust, but no one is going to work harder to right this ship and do everything in our power to make sure you guys have a company to come back to after this is over. I just remember feeling COVID is not going to take this from me and this team and what we've put in and built. There's just no way.
But I think that would be very difficult to lay people off, right? But otherwise it would be worse to just let it.
The company would have been bankrupt. If we would have depleted all of our cash, because you forget that you need, to reopen, you need time to reopen. We had to retrain people a little bit. Some people hadn't coached in 6 to 8 months. Mm-hmm. So we had to bring everybody back on board. It took time and money to be able to do that too. So, but we also, we had a major fundraising deal fall apart in COVID. That happened in August of 2020. We were 30 days out from closing the deal, fell apart. That sucked. And then 5 months later, it was okay, let's try again here. And so we raised money. We haven't had a healthy valuation, but the terms were slightly favorable to the PE firm. But again, I was okay with that because it was all based off of their returns that I knew I could get them. So yeah, we took another $50 million investment and we opened 11 studios in 21, while most people were still shutting down locations or reopening, the ones that they had, and we were just we're gonna play offense.
Yeah, fully coming back. And then did you find when you sold, do you think COVID had any impact?
I mean, our rebound after COVID, yes, I do think in a positive way. I think the way that we weathered that ship, I mean, there was a lot of companies, Flywheel, SLT, that never really recovered, took a long time. And there's some people who aren't back to where they were before COVID. Our numbers in the studios that were open are performing way better. And we've opened so many more locations since then. So it speaks volumes to our ability to weather a storm, which is really important, to our comeback story that nothing was going to keep people away from Solidcore. So I think it really, frankly, helped the valuation when we ended up selling when I ended up selling in 2023.
Yeah, and I think Pilates now is even more popular. I keep seeing it all over.
All over. I mean, listen, Pilates works. Solidcore, nothing changed my body the way that Solidcore did, and it's hard. It is a hard workout. But you're not jumping, pounding, nothing, I always say this, there's nothing you can do that will prepare you for Solidcore and help you be better at Solidcore, but doing Solidcore makes you better at everything else. It makes you a better runner. You're less prone to get injuries. It makes you stronger. All of the little muscles that get ignored, what Solidcore does is we're targeting your slow twitch muscle fibers. So it's really strengthening the bigger muscles around you so that you just have better functionality, and again, it also creates nice toning and definition as well.
Yeah. But when you guys did sell, and the whole process of that, like, did you know a lot about selling a company going into it?
I didn't know anything about raising private equity money I learned more about selling a company through the process, of course, but when I raised my first round of private equity, I knew nothing. And it's really important to tell people around you, I don't know what that means. What am I signing up for?
Yeah, there's a lot of like jargon.
There's a ton of jargon, like a preferred return. And like, what does that mean? And one thing I have learned is I will not be afraid to ask a question. Like even you just ask like, what's an LOI? Like, because people are afraid of looking stupid. I'll tell you what's even worse, signing something you don't know and realizing that like, gosh, I wish I would have asked about that. And so I have this motto and this mantra of like, people I surround myself with, my lawyers, my bankers, my accountants, if they ever make me feel stupid for not knowing something, I do not work with them. I will not be made small because you've been in an industry for 10 years and I'm just learning about it. I wouldn't expect you to go build the Pilates business and not ask any questions. So I had really great people around me who took the time to teach me and that were looking out for me and making sure I wasn't making, bad decisions. And that's really important, of finding a tribe of experts, and accountants, lawyers, and bankers are part of that entire process. So don't be afraid to ask questions. Like you have to, and do your own education, reading, listening.
And then what was it like after you sold, just like personally, like were you burned out by that point doing it for so long, or like?
I wasn't really burned out. So again, another thing with selling a company is succession planning. One, you have to know how to scale if you're ever going to raise money or sell. And two, once you raise private equity money, and a lot of people bitch about private equity, and I'll tell you something, like when you take private equity money, these guys are in it to make money. And once you forget that, you're gonna get frustrated. But once you accept that, like that's their job, is to return healthy capital, a return on capital to their partners and their investors in their fund. That's the way that it works. So don't be pissed off about something that you signed up for. And so I knew that I didn't want to do Solidcore forever. And I also knew that I always wanted to have the ending that I wanted on my terms. So how do you do that? You succession plan. And so after raising money in 2021, I was very clear with our partners at BMG that like, I'm promoting our COO to CEO. I'm gonna go in the exec chair role. I'm not going anywhere, but like we need to let somebody else run the company for two reasons. One, I don't wanna run the company on the next transaction. I'm not gonna get stuck here working for somebody else. And two, it just makes it more valuable for everybody who has equity. When you can show that a brand works with a second CEO beyond its founder, it just ups the value that like, oh, as long as we have a strong, capable CEO, the company will continue to thrive. I moved into that exec chair role. Brian did an amazing job as CEO. We hired additional talent to take us to the next level. And so when it came time to sell, or the conversation, I was like, I'm ready. And like, I didn't have to sell. So I, again, got to call like the shots and the terms that I wanted. And it wasn't messy. It was exciting. It was like joyous and special, and also because I got to share some of the proceeds with the employees, which has always been a big important part of like my ethos.
And then after, did you take any time off, or were you like had an idea in mind? Or?
Yeah, no, I've taken time off for sure. I mean, it's kind of nuts that it's almost been a year already, but like within that year, we moved to San Diego, we moved to Miami Beach, we moved here. I bought 3 properties, sold one of those properties, got married, built this house, decorated this house. I did start another company in the middle of this, and then we ended up closing that company down. So and I've played a lot of beach volleyball, as you can see from my backyard. So it's been like really great. And now the focus is really on the speaking career, which I'm very passionate about. I love speaking, and I love the in-person speaking because I want people to know they can be empowered to live any life that they want to live, and you can create that for yourself, and using my story to help give people examples and then teach them how to do it. And then continuing to work on the book, which is taking me forever, if I'm being honest, because all the other things have been going on. And I feel like I've just been pushing it off a little bit, knowing that like once that gets done, I'm going to be back in the throes of things.
I was wondering, I was like, for sure you've got to write a book. Like,
yeah, I just want to, I'm a kid from North Dakota, right? So I didn't see a whole lot of options as a kid. And you have to start asking your questions around, there's got to be a different way to do this. I saw everybody's parents go to work Monday through Friday, you know, kind of come home. It's, you know, weekday chores, errands, running kids around, you know, weekends come, longer chores. Like, I just was like, this can't be all there is. Like, this just doesn't feel exciting to me. So I left home super early and just was like, I want to make this life that I want for myself. Like, I can make as much money as I want to make. Like, I can build and create things that don't exist. If somebody else can do it, why can't I do it? And a lot of times I think people lean into why they can't or why they're not capable, or, you know, any kind of disadvantage that they might have. And it's like, well, I can't because. I'm like, the more you say that, the more it's going to be true. And it may sound silly, but if you can't get your mindset right, like, you're always going to be stuck. And people think that's woo-woo, of telling yourself that you're capable of these things. And it's only woo-woo if you don't follow it up with action. You know, telling yourself, like, I can go raise $50 million. I'm going to go do it. Like, it's both things together. But I won't even get to the action part if I tell myself, like, oh, that's just not possible for me.
Yeah, it's so true. It's like, if you can't even like write it down, or like write down like how much you want to make or whatever, it's like, then there's no way you believe that you would do it.
Totally. And I just think it's important to continue to level up in all areas. Again, growing your business, a lot of people keep doing the same thing and they just think the business is going to grow. And I'm like, if you're having the same meetings, spending your time, and we'll use fitness for an example, if I was still coaching 20 classes a week at Solidcore, we would have 2 studios or 3 studios and that's it, because I wouldn't have time for anything else. At some point you graduate and like, okay, I'm gonna coach less. I can hire people to coach, like, I'm not necessary. Okay, well, I'll work on the locations in the building, whatever. Okay, well, cool, now I've hired somebody else. We have a process and data to show what locations and markets we're gonna open in. Someone else can learn that and then execute, so I don't have to be involved in that. And if you're not continuing to do this, your life stays the same all the time.
Yeah.
And now it's the same, you know, with money. Like, I won't make an investment in anything unless it's 250 grand or less. Why? Because if I invest 20 grand in something and I 10x my money, like for the place that I am in right now, 200 grand is like not gonna, you know what I mean?
Or
It doesn't matter.
250 or more.
250 or more. Yeah. Whether it's a stock, whether it's a company, whether it's like anything else is just not interesting to me. And I'll tell you what, Shelby, like, I had to really adjust to that after selling Solidcore, because it was like, oh my God, okay, wow, like, this is everything I knew I would happen, and it happened. And I used to think $10,000 was expensive. And the more that I told myself that's expensive, well, then I never would have bought this house.
Yeah, it's like you have to readjust.
Yeah, you have to constantly push yourself. Like, yeah, that's uncomfortable, but now no, it's no longer uncomfortable. It's just like running. Like, a marathon seems scary until you run a marathon.
Would you ever do anything else in the fitness space, you think?
I don't know. I've been wrong many times when I say never. So like, I don't know. Like, I don't have a strong desire to start another company right now. One, I know how much work it is. Like, I've done it twice, right? Nonprofit and for-profit, and it was 17 amazing, beautiful years of my life, and I wouldn't change it for anything. But I know if I did it again, one, something has to compel me so much that, like, I just can't not do this, and it has to be something that's really gonna make people's lives better. But it's your number one priority if you really wanna make it. And for 17 years, family, friends, relationships all sort of came second to my ventures. And I'm just exploring what that feels like to not have that. Like, I really like prioritizing going to play beach volleyball at like 4 o'clock every day, and that's important to me. And it doesn't have to be around the business side. I enjoy obviously spending time with my husband and us doing experiences, and again, the speaking in the book. And like, if it feels like it's not enough, I'll change it.
And then last question, I guess, to wrap it up, is what advice do you have for people who are business owners or like have an idea that they want to get going?
My advice for people who are business owners is think about what the end game is. And I don't think people think about that enough. And then they find themselves like in their 50s or 60s and like, oh, I don't want to do this anymore, but there's no plan in place for you to not do it anymore. And a big part of that is not tying your identity to your brand or company. You know, having enough, again, self-worth and self-confidence to know who you are without that thing. So that's one thing, is think about where you want to get to, and do you have a plan in place to be able to get there? Or is it just like, I'm just running the business and like, I'll figure that out at some point. Like, it takes years to succession plan. And for those wanting to start a business, stop convincing yourself because you don't have it all figured out that you're not capable of doing it. I say this line a lot, but like I will only play a game I can win. I'm never gonna be the CEO of a tech company. Like that's not my world. I don't understand it. I don't know tech. Like that's just not something I do. But I know how to build a branded experience. I know about community. I know about health and wellness. And like I know what is sticky with people and how to get them to come together.
All right, I hope that you guys enjoyed learning about Solidcore. If you like this kind of video, be sure to check out my video with the founder of Smart Sweets and the founder of the Dry Bar. I'll have them both linked down below. Thank you guys for watching. I'll see you in the next video. Bye.